Hi, Geoff Atkins here, Managing Director of Vital Metals, here to talk about the Nechalacho project up in Canada. Exciting times for us at the moment is that our operation up there is well and truly underway. All of our construction activities are moving forward to build our rare earth extraction plant in Saskatoon, and we're on track to be producing our first rare earth carbonate by the end of this half of the year.
Brilliant. Geoff, good to see you. Been a while. Haven't seen you since, I think, September. So just want a quick catch up. The quarter report came out today. Just want to understand a couple of the variables in there. You're talking about redesigning the pit. Has something gone wrong, or is there an opportunity ahead?
No, this is very much an opportunity. We finished our first mining campaign. And during that mining campaign, there are a couple of variables which we wanted to test. The main one was the ability of the ore sorter to process low-grade product. And during test work, what we found was that the ore sorter was actually producing a higher grade product than was expected from a low-grade ore. So what that means is it's really opened up the possibilities of processing additional material through that ore sorter, and increasing the amount of rare earths which we're able to recover from the deposit.
Okay, because you talked about finding it's like higher grade than perhaps you were expecting, which I guess then makes up for the fact that the contractor wasn't actually able to dig up as much ore as they had hoped. So I guess it's kind of worked out in the end. But what was the delay on their part? Again, was there anything wrong that we need to be aware of?
No. So look, what happened was that as we were digging the pit, in the pit wall, we came across a very high grade zone of rare earths. And this area was so high that we actually have just direct bagged most of that product. That's how high that grade was. And this material was not actually included in our resource, but it went back into the pit, into the pit wall. And the concern was that if we continued our mining campaign and kept going down deeper, we might run into a problem where we wouldn't be able to come back in the future and pick up that additional product. So the decision we've made is that because of this additional material and this additional high-grade material, plus the ability now that we know that we can process the lower-grade material, it makes a lot more sense for us to stop when we know we've got enough material on the deck now for the first 2 or 3 years. But it makes a lot more sense for us to stop now and redesign our pit so that it optimizes the new information which we now have.
Right, and so how long is this going to delay things by, and what's that going to cost you? What's the incremental cost on this?
Well, it doesn't delay things at all. So we've got more than enough material on the deck, both processed through the ore sorter and also waiting to be processed through the ore sorter, to last us for a good 2 to 3 years. So it doesn't impact our project in a negative way at all.
And one assumes that because you found this sort of high grade, which you weren't expecting, that if anything, the economics should be better. I mean, that's your hope at least, isn't it?
That's exactly right. So obviously finding more material within the same body of ore is a huge bonus for the project. And it extends the life of the North T deposit. It means that we can process more material there. There's obviously the per kilogram mining costs are obviously reduced because there's a greater percentage of material. And from a rare earth project perspective, and you start thinking about risk management, what this means is that that first campaign has really alleviated the risk from a geological perspective, that we're not going to be able to pull out as much material as what we'd hoped. In fact, it's the opposite. We have this fantastic problem of how are we going to make sure that we can pick up all of this additional material.
Right, because the market hasn't actually understood that yet. I know it's early days, same day, right? So your job is to actually help people understand that this is about increasing the potential, increasing the economics, and that's why you're redesigning. There's nothing wrong. Just say it again.
That's exactly correct. So this is about how do we maximize the opportunity which has been presented to us through our mining operation and also our ore sorting operation.
Right, and it's not impacting on the timescale, because you say you've got enough at surface at the moment. So are you spending money, or have you had to stop spending money on the ground at the moment in terms of additional drilling or any other kind of operational activities on the ground?
From a North T perspective, the only thing which we'll be doing there over the next year is a little bit of site cleanup work. We will be operating the ore sorter, which was always planned. The other things which we will be doing, though, over the coming year is we'll start to implement our growth strategy, which is really about that larger scale operation. So this is all about the Tardif deposit, which is a deposit just to the south. And this is an area which has a total contained rare earths of over 1 million tonnes. So it's an enormous deposit. And this is really where the second stage of our development plan comes in. This is the larger scale operation. So that work will now start to kick off over this year.
Right. And I mean, you've got, how much money have you allocated to that?
For that one there, we've got about $1 million allocated for a drilling program. Right.
So it's not significant, but you want to start the process now to try and better understand it. But that's kind of fine, because I think the long pole in the tent that people want to see you getting on with is obviously the Saskatoon rare earth extraction facility, right? That's where the money's made. So where's that?
That's where our focus lies.
Right.
Our focus lies there. So we've been, all of our major equipment has been ordered. It's all on its way. Most of it's just about arrived there. As with everybody else in the world at the moment, which is we have been impacted by the supply chains, which has delayed some of the equipment arriving a little bit, but none of that impacts our end date and our target date for producing product. When we designed our plant, we were aware of potential issues with shipping, and so we actually mitigated a lot of that by purchasing all of the what I'd call the critical equipment locally to avoid that issue. So we haven't been affected by that from a production perspective.
Right, or cost perspective.
There's some minor cost issues with any project, but look, we're very, very comfortable. It's all within our plans.
Okay, so what I'm hearing is ore sorters delivering over and above your expectations. Yep. Right. Why is that, by the way? Why is it managing to do that?
It's really about its ability to process low-grade material. So material which was below the cutoff grade in our resource model, we can now process that material. So that's the unique advantage of the North T deposit and the use of the ore sorter.
Right.
Grade isn't impacted.
Right, but obviously the cutoff grade is well. Do you go to bother or spending money to updating the report to better understand the economics, no. Or will there be an assumption based on the, I guess, potentially new cutoff grade?
It's going to be an assumption.
Okay, fine.
Okay. So what we're doing, to give an indication of how obvious it is, it's all being done by site. So the geologists we have on site, when we go through the pit, it is literally a case of this bit of material has red ore because the ore is bright red, the waste is bright white. So it's like picking red marbles out of a bag of white marbles, literally. That's the best way that I can describe it. Okay. And it doesn't make any difference if you have a lot of them or a few of them. It's still they still stand out just as much and are just as easy to pick out. Got
it. I guess the bit I'm trying to work towards it. At what point could we understand the incremental gain in terms of what it's able to process? And would you be able to put either a dollar number or a percent number on it, or a total number on it for us? Because we need to be able to work out what it could mean.
The key one there will be the revised pit design, because that will come in with a revised cutoff grade, and that will have a new quantity of product which is actually going to be extracted. So when we revise our pit design, that will then pick up this material, and we will then that's when we'll be able to really quantify exactly how much extra material there is.
Okay, so ore sorters are performing above and beyond expectations. You found a higher grade zone which you weren't expecting, therefore redesigning the pit to maybe capture more of that economics, and at some point this year be able to kind of indicate to us what that could mean. Okay,
that's correct.
Some small supply chain issue delays with regards to the Saskatoon extraction facility, however, broadly on schedule. Yeah.
It was, any supply chain issues there, we did predict that might be an issue. And so we put steps in place early to mitigate that. So it doesn't impact our start date for production of carbonate.
Okay, so let's talk about on the ground. I'm trying to find things which are going to be problematic or bumps along the road and what you're going to do about it. So it's Canada. How are relations with the locals?
We have fantastic relations with the local communities. I couldn't ask for anything better. Our workforce, our contractors, if it wasn't for the support of the local communities, we wouldn't have been able to get our project up and running in such a short period of time. And I think that's something which is, I guess, easily overlooked at the moment as well. When you think that in 2 years, we have gone from purchasing the project, defining a resource, defining a flow sheet, financing it, getting approvals, and completing our first mining campaign, all within a 2-year period, which I think is rather unusual in the mining space and definitely very unusual in the rare earth space. And we wouldn't have been doing all of that during a pandemic. So we wouldn't have been able to achieve that without the strong support of the local communities.
Yeah, I mean, it's rare earth projects typically have big capex numbers associated with them, and that's usually the off-putting factor. And then followed by technical expertise on the ground, etc. And obviously, we've talked about your track record in previous conversations, and that of the team. It's a relatively low capex project. But just so again, remind the audience, where exactly are you inserting yourself into the rare earth ecosystem ex-China?
So what we are doing is we're going to be producing a mixed rare earth carbonate product, which means we will then sell that to separation facilities. Our role is about feedstock. It's about generating feedstock. So we will support those companies who are looking at building these separation facilities, and we have a offtake agreement with Retec in Norway and also an MOU with Ucore in the US. So our role is to support those companies with their conversations with end users and governments to ensure that those markets have the required feedstock that they need. And by taking the approach which we have, because the critical element with rare earths is you need to go through a qualification process. So your car manufacturers, magnet producers, they're not going to just suddenly buy 10,000 tonne of product on day one from a company they don't know. So any new entrant into the market has to prove themselves, and you do that by starting at a reduced scale, which is exactly what we've done. It's what the plans are for Retec and Ucore to go through that qualification phase. And what that means is then by 2025, 2026, which is the target for when, and all the expectations are that that's when the demand is really going to start growing. We will have been operating for 2 to 3 years as a known supplier and as a credible supplier of rare earths into that supply chain. And from our perspective, we then will make sure that at that point in time, we have the capability to expand in line with the growth in demand.
Right. Okay. And as a North American company, I guess you'll be looking to North America as well. You obviously mentioned Europe, there, and Norway. But the ideal scenario for you would be what? Because you're starting to build this facility. Obviously there will be great desire for whatever it is that you produce, but what's the end game here in terms of the scale of this thing? I mean, you set the expectations quite low there. I think. How do you say to the market, do you know what? This thing could be meaningful, and I think we've got a plan to make it of a meaningful size.
I think the best way to describe that is, I mentioned it earlier, the Tardif deposit has over 1 million tonnes of contained rare earths.
What does that mean? What does that convert to? Give me an example.
If you think about 1 million tonnes, MP Materials currently produce about 35,000 tonnes a year. That gives an idea of how big a project the Tardif deposit and the Nechalacho project can sustain just through that resource.
But remind me how you're tackling it here, because you're kind of like starting small and you're talking about the potential of this thing. Give me a sense of how this thing ramps up. Are you part of that solution, or is this leaving something on the table for the next guy coming down the line?
No, so this is really about the way that we describe it is we start off with building the foundations, then we build the growth. So it's like if you're building a building, you can't go for a tall skyscraper until you have the foundations right. And that's really what the focus is for the next 1 to 2 years, is really building those foundations, proving our capabilities to produce product. Then you go with the growth strategy. Then you make sure that you build the capabilities to be able to expand in line with demand. And that's really where that work program now starts this year, to get those projects ready to be able to come on stream as that demand kicks in.
So again, why is that the right strategy? Because it seems it's based on what you've seen happen in the past, not necessarily some of the good news stories that rare earth companies like to talk about coming up in terms of the demand in the future. So it's a kind of cautious but salutary business model in a sense. What would need to change for you to be a little bit more aggressive?
Look, it really comes from the lessons that we've learned. And the lessons that we've learned there's twofold. One is that rare earth projects typically are actually very difficult to produce product at specification. If you try to go too big too soon, all that happens is you don't produce product at specification, and it costs you a lot of money. And fundamentally what that means is your shareholders lose. So if you look at any company who started in 2010 or around that time, shareholders from that time haven't really made any money. So the whole focus is, how do you get a good return on investment for your shareholders? And that's about saying, okay, we're going to minimize the upfront capital until we get into positive cash flow. We'll mitigate any processing risk and any project risks whilst we do that. And then we'll expand when we're an operating company with positive cash flow. And that really will ensure that from a shareholder perspective, you get dilution is minimized and returns are maximized.
Okay, you're going to be producing, or you're aiming to produce carbonate by June 2022, right?
Yep. First carbonate product is targeted for June 2022.
And let's set expectations here, because with mining, there's a kind of ramp up to these things.
That's exactly right.
Right. So it's always nice to say, oh, we're producing. Brilliant. But in terms of what that looks like in terms of revenue flow, because it's not even going to be free cash flow, clearly, because there's lots of costs associated with building this thing up. When does it ramp up to optimum output? And then what?
Our experience is that that takes over 12 months to achieve. And this is one of the issues and one of the reasons why you want to start smaller, because you want to minimize what your operating costs are during that time. You want to be able to make sure that you get that product right at the very start, and then you ramp it up. If we started with a really big project on day one, we'd have a massive capital spend, but then your operating costs are also very high. And then you have that ramp up profile, which means that you're not going to get any money. You're not going to cover your costs for many years on that. So all that does is it actually just means that shareholders get diluted even more.
Okay. So give us a relatively simple product, okay, carbonate, right? You're building the extraction facility at a certain capacity now, and you're ramping up over the first 12 months, tweaking and tinkering, make sure you get the economics as optimized and efficient as possible. But like I say, the then what bit is that thing scalable given the size of 1 million tons you're talking about? Is that the game plan? Once you've
it's immediately scalable to be able to be doubled. So the actual scale of the equipment on day one, 90% of the equipment is already oversized for double capacity. So it's just from our lessons learned and from our experience in other rare earth plants, there's some equipment which we have left at that smaller size until we bed in the process, and then we duplicate it. The rest of the equipment is already scaled for double capacity.
Okay, fine.
So that's our initial expansion.
Right, and give me a sense of the economics around that. So I want to understand the scale.
So that will be producing, when it's scaled, that will be producing about 1,000 tonne a year of neodymium and praseodymium. Current price for that is about $150 a kilogram. Our carbonate prices are typically about 50%, so $75 a kilo revenue-wise. That's a reasonable revenue line.
Okay. We'll do some numbers off that. Okay. You've also got some other projects sitting in the background in Tanzania, Burkina, and Faso, and Germany. They're all kind of just parked up for now, right?
Yeah.
Because you're focused on this, you focus your money, your time and effort on getting this thing up and running. Is there any kind of inclination as to what you might be doing with those projects? Do you just maintain those, or can you monetize them?
At this stage, they certainly are a lower priority. Our focus really now is on the rare earths. So, as I say, it's getting North T up and running. It's expanding into Tata. We then have other rare earth projects as well, which will allow further expansion. And probably one of the more exciting things as well is that we also have building a little portfolio of projects which will have the capability of producing heavy rare earths as well, so that we can become the first producer in North America who can produce commercial quantities of both lights and heavies. One thing which not a lot of people realize is at Nechalacho also has a distinct heavy rare earth zone. So work will start on that this year as well. So we certainly have our work cut out for us in the rare earth space. And I think that the next 12 months will be pretty exciting around defining what the future of the company will look like.
And obviously, we're seeing a lot of companies popping up with rare earths in the title. So, it must be true. They will produce rare earths. It's where you've outlined it. It's harder than you think. And if you've not worked in the rare earth space before, you're more likely to trip up over your shoelaces. I think there's a little bit of that. Do you think people are getting a little bit distracted by some of these wannabe players?
Oh, I think without a doubt. I think it's very easy to put out announcements on drill chips and things like that, which look sexy. And unfortunately with rare earths, because not a lot of people really understand the complexities of the business and the specialist nature of it. There are obviously some people who are taking advantage of the current boom in the market to let's just say put out some interesting announcements.
I think they are. Well, I liked yours today, so that's the key thing. Keep at it, stay in touch, a lot going on. So we'd love to hear from you as things progress. Appreciate your time today.
Great, thanks very much. Thanks for having me on.